whether or not trade finance function must be part of credit management. To me, this is pure organizational issue, but we got trade finance is kind of specific, working with banking instruments, working with LCs and bank guarantees and all insurance and everything. But whether or not this trade finance should be part of credit management or it could be separated. Do you have any opinion on that?
That's a very interesting and very desirable purpose that we could have, but I think it's limited to organizations that are really very, very well organized and very professional. I mean, we must also think a bit about, let's say, one of the roles that we have as credit management associations, that the education of all those companies who are not really doing their credit management very professionally. I mean, when I refer to this alphabetical list of debtors, that's a very good example of a company that is not really doing some credit management. They are just on Friday afternoon, they are calling some of their debtors to get some payments in, which means that, and this group is larger than what we think, because we don't know them, because we don't see them, they don't hear them, they are not interested in credit management. And there we have a huge role as credit management associations, and I believe that Joseph will agree with me, that we should not only emphasize the professional players or all those credit managers who already have the education, who have the tools, who have the knowledge to do their credit management professionally, we should also pay some attention to all those who still do not have a professional credit management, and to try and convince them and to give them the tools and the knowledge to do this professionally. I don't know the people who are attending this session now, but I'm afraid that they all belong to the first group, those who are already working professionally on credit management,
Majority of them, yes,
and who want to deepen their knowledge, right?
I believe so.
Yeah.
To the extent it is known to me, majority of our today's audience are from credit.
Yeah, well, you also see it on the kind of questions that are asked and the kind of remarks that we see in the chat. Those are not people who know nothing about credit management. They are asking very relevant questions and giving very relevant observations. So coming back to the initial question, yes, financial knowledge of trade finance, knowledge of all the instruments that are available and that are necessary for the professional, let's say, financial management, treasury management, credit management, they all go together. But in many companies, I think they don't have the right maturity or the right knowledge and the specialized people to do this. And smaller businesses, I'm afraid, cannot afford to acquire all this knowledge. They may try to, and it's good that they are aware of all the things that they don't know, and to try to optimize and compensate their lack of technical knowledge by doing the things that they can do very professionally and with very concise and very good procedures. But let's say in practice, some of the tools that we could be using are only available for really big and very well organized and professional organizations.
Joseph?
To be honest with you, I don't have anything to add with what Ludo said about trade finance, because I think it all depends on the size of the company, first of all, and the culture as well of the company, because it plays an important role, culture. As Ludo said, I mean, going back to the question, credit management should be part of the whole process, as I already said, and therefore it should be part of the whole equation, including trade finance. Because what we're saying is cash in and cash out. So we are there, the people working in the field of credit management, we are there to ensure that cash is coming in together with trade finance. and we should make sure that there is enough cash which needs to go out in terms of paying bills and also to continue purchasing so that our stock, if we're talking about, if we're referring to companies who are reselling or manufacturing, we should make sure that there is enough money to continue buying the raw materials or the materials in order for us to have enough product to sell. Obviously, when it comes to the service sector, it's a totally different sector, and this does not come in.
My position, thank you very much, Joseph. Thank you very much, Ludo. I will try to add a couple of words. When I was trying to think about successful credit function or optimal credit function, I just found that if we look a very detailed view, there would be about 50 to 60 credit management tasks within the credit management process. There would be groups like defining optimal credit terms. There would be group of tasks related to control and group of tasks related to collection. But the real job of a credit manager is to establish real culture which makes everyone involved in fulfillment of these tasks working together and make sure they do that in most effective and most possible effective way it is done. So coming back to trade finance, it could stay, and very often, by the way, for this credit function, some tasks and some sub-functions could be outsourced to outside, like external collection, like external credit analysts. And within the groups, like very often we can see people who allocate cash are sitting outside of accounting or even sitting outside of credit management department. The same story could be with the trade finance, but as long as all these functions working together effectively, it doesn't matter which manager or which department or even part of sub-organization they belong to. If they exercise the same culture of, as Joseph rightly said, cash in and cash out, better service to customers, faster cash. Again, from other side, if to establish such a culture, it is necessary to make trade finance subordinate to credit management. This should be done. Or if the policy of a company is to make sure that the whole portfolio is covered by trade finance instruments, this could be the case, for instance, in trading business where the margin is low and the impact of one bad debt is actually bankruptcy for the company. Even credit management could report to trade finance, whatever drastic it might sound. The thing is, the company is to establish credit culture where everyone works together for the same final result. Just like that.